Good morning, ladies and gentlemen. My name is Greg McGlosky. Today's day is August 3rd, 2022. I'm going to take a look at some of the technicals in the market, but before that, let's talk a little bit about the fundamentals. What we saw overnight was that Pelosi concluded her trip to Taiwan, saying that the U.S. would, in her words, I guess, said that today the world faces a choice between democracy and autocracy. Americans' determination to preserve democracy here in Taiwan and around the world remains ironclad. So that's from the mouth of Nancy Pelosi as she gave her keynote speech in Taiwan today. China responded by saying that they would have live drills over the next 4 or so days around the island nation, and that certainly is something that the people of China will have to live through, and hopefully the world will be watching that to see how that progresses. In other news, Fed officials are speaking after the FOMC meeting last week, and they tell a different story than what the Fed chair implied, I guess, during his press conference, that the Fed was more data dependent, with inflation, some inflation numbers coming down, including oil prices, commodity prices like lumber and wheat and corn and soybeans and all that moving to the downside. There's hope that the inflation would start to ease. Add to that the inventory problems that big box store companies like Walmart and Target are having suggests that sector of goods may start to come down. Prices may start to come down as well as a discount to get rid of the excess inventories. There is comments. I think Mester talked about the service prices may remain high, especially if things like the stock market continues to move higher, gives consumers confidence. Also, if housing prices don't crash or come down, that would also give consumers more confidence. And so I think the Fed is worried that things like lower interest rates, a rejuvenated housing market, higher stock prices are going to give the consumer the go-ahead to spend, and push up prices more, and that is their concern. They want to stop inflation now, and so they're going to continue to raise rates until that happens and continue to draw up on the markets to try to get rates up. Yesterday, the 10-year yield moved up around 17 basis points as a result of the chatter, and today they're up a little bit as well. All right, so let's get into the technicals that are moving the market. We'll just start with the euro versus US dollar as we usually do. And yesterday we saw the price move above the 50% retracement. That went over like a lead balloon, and the price fell like a lead balloon. We saw the price move back below the 100 and 200 hour moving averages after trying to hold support against those levels. And we, as you can see here, we found some resistance against the level and pushed to the downside. And when you get in these non-trending type markets, you always have the prior lows to try to get to and through. And as you can see, the low price that we saw in the Asian session today fell short of the low price that we saw, I guess that's last Thursday, which was a target on the downside. We moved back up to the broken trend line. The 200-hour moving average came back down again, fell short of that, the prior low and the prior low before that. And we started to move back to the upside, where we now are finding resistance in the current hourly bar, or maybe the last hourly bar, right against the 100-hour moving average. I've said all along, this is the barometer in between the range that we've seen for this currency pair, and that pattern remains here today. And until the price decides to either break to the upside or break to the downside, we're going to continue to waffle back and forth, and hopefully using these levels as support and resistance so traders can lean against them as a defined risk, limit risk, and then accept risk during their trade. So at least you can do that as a trader. Let's take a look at the sterling versus US dollar. Fell down yesterday. We did initially find support against the 100-hour moving average, and then was able to break below that level and move our way further to the downside. I have this area is sort of a support area in the short term. We had a low here, a low here. We broke below it here and then sort of reestablished support. And then we had the Friday end of month volatility here that took the price below that level. higher level, so on and so forth. I'm not saying that it's the best support. Actually, I think this area right here, where we have the snaking 200-hour moving average wrapping itself around the trend line here, is going to be a key level going forward on the downside for the sterling versus US dollar. If we're able to break below that level and stay below that level, currently at 121.18 and moving higher, then that would be more bearish for that currency pair. But so until then these corrective moves are corrective moves, and they do have the potential to move lower. But we are seeing support buyers come in, maybe ahead of this area, and holding support. So on the top side, you've seen we've tried to move back above the 100-hour moving average on a few occasions here today, but not able to sustain much momentum above that level, currently trading in between the 100 and the 200 and the trend line and this swing area. That's the story for the sterling versus US dollar. Let's take a look at the dollar versus yen. We'll start by, I'm going to start by taking a look at the daily chart in this pair. As you can see, yesterday we moved down. We've got fairly close to the rising 100-day moving average. That's the blue line in the chart. Haven't been below the 100-day moving average, going all the way back to this day right here, which is September of 2021. So that September 2021, yeah. So that is a fairly long time ago, almost a year ago, that the price has not been below the 100-day moving average. But we couldn't get below it, so we started to see a rebound to the upside, and I earmarked this area right here between the 61.8% retracement of this move at 131.32 and the swing high and swing highs, I guess, here, and swing low right here between 131.24.6 and 131.43 on the top side. I think that's 43. If you take a look at the hourly chart, these are 43. So these are those levels around the 61.8% retracement. And as you can see, last week the price moved down to test the top side of that level and bounced higher, and then we waffled above and below it here before deciding on the downside. And during trading yesterday, the market moved up to that area and then it broke above it, moving to a high price that stalled just ahead of the 50% of the last leg to the downside at target after getting above the 100. And then we had lots of volatility in the Asian session here today, but we did find support right near the 132.24 level. So that's giving the dollar yen a bullish bias here. Also giving a bullish bias is the holding of the 100-hour moving average. So here's a marriage between the daily chart and technical levels going back in time, and the hourly chart held support using the 100-hour moving average, so on and so forth. Here's a 100-day moving average. So if anything, the bias for the dollar versus yen is to the upside, but the 50% retracement of 133.94 is next target to get to and through. Finally, I thought I would take a look at the dollar versus Canada. This is on the hourly chart, and we saw what we've seen over the last 2 days is the attempt to break above the 200-hour moving average here, and then we had a lot of fails yesterday, and then here after we moved back above in the Asian session today and into the early European session against through here. The price, though, has been able to break down below, but we are finding support, continue to find support against the 100-hour moving average down here. So there's a battle going on between the 100 and 200-hour moving average that we'll be watching in the dollar versus Canada. Oil prices are up and down, more up lately as after a report that the OPEC would look to deliver just 100,000 barrels per day quota increase. That was a bit disappointing to the market. So we saw the Canadian dollar move to the upside down, but test the 100-hour moving average to find support against that level. So there you have it. A look at some of the major currency pairs and a little talk about the fundamentals. My name is Greg Michaelowski. Good fortune to trading. Bye-bye.